Greetings everyone. Welcome to my channel Inside Accountancy by Ch-1, Accounting Made Easy. Thanks to all my lovely subscribers for showing their love by writing all those lovely comments. And when you ask doubts, that's absolutely, I love it because it feels that, I'm helping you all and you all are actually understanding what I'm teaching. So keep doing that. Those who've come for the first time to my channel, please show some love and like, share, and subscribe so that the videos reach to the maximum people who might be in need. In this video, we'll be talking about accounting for share capital, which is the chapter 1, volume 2 of T.S. Gariwal. The contents of this video would be calls in arrears, calls in advance, and I'll explain all these with the help of an example. So we are going to talk about calls in arrears and calls in advance. Calls in arrears I've already explained in my previous videos also, but still I'll explain it again. So what is calls in arrears? If a shareholder does not pay the amount which is due on any allotment or any call according to the terms, then the amount not so received is called as calls in arrears. So if there is any default made by a shareholder for the non-payment of any allotment or for the non-payment of any call, that amount which has not been received is referred to as calls in arrears. Now, this unpaid or arrear amount on account of allotment or call may or may not be transferred to calls in arrears account. This means that whenever we are not receiving certain amount on account of calls or allotment, we may transfer it to a new account, we may create a new account, calls in arrears account, or we may not do that and we may pass the entries directly. I'll explain it in the accounting treatment also. In case our article of association is silent or it does not have a clause with respect to the interest on calls in arrears, then table F of the Companies Act 2013 shall apply, which provides for such interest to be 10%. This is not 12%, sorry, this is 10%. Right. So calls in arrears, the interest on calls in arrears, if mentioned in the AOA or if not, then according to table F, that is 10%. Then talking about calls in advance, a company may, if its article of association allows, accept amount against the call or calls which are not yet made. That means although the company is making allotment, but the company may receive the amount which is yet to be called on any call. So the amount which is received on a call that has not been made yet by the company, that amount is referred to as calls in advance, and that is a kind of a liability that the company has because that amount is received in advance. So that's a liability and it is shown under the current liabilities in the balance sheet. So if the article of association is silent with respect to interest or if it does not mention anything about it, then the company will follow the table F of Companies Act, according to which the rate of calls in advance is 12%. Okay, so the rate of interest on calls in arrears is 10% and calls in advance is 12%, right? So now let's talk about the accounting treatment in case of calls in arrears and calls in advance. Now calls in arrears, we are not receiving certain amount. So in the, whichever call or allotment, whichever entry we are making in the receiving entry, which entry? In the receiving entry. When we are receiving the amount, then only we'll come to know whether we have received all the amount or not. So while we are passing the receiving entry for any stage, their calls in arrears account is debited when we are making an account. And obviously on the credit side will be relevant call. For example, if allotment is not received, our entry will be bank account DR, calls in arrears account DR to share allotment. So on the respect, the relevant call or stage will be credited and calls in arrears will be debited. Talking about calls in advance, again, when we pass the receiving entry, then only we come to know that there is certain amount which has been received in advance. So in the bank entry, calls in advance is credited. Suppose on allotment we are receiving the first call money, so our entry will be bank account DR to share allotment. That's the basic receiving entry, and since we are receiving calls in advance and it is a liability, therefore it is credited, so calls in advance account will be credited in this case in the receiving entry of whichever stage on which you are receiving the extra amount for the stages which are yet not made. Also, you should remember that suppose we have received the first call on allotment. So now when we make the first call, when we do the receiving entry for first call, that is bank account dr to, let's say, share first call, in this entry the calls in advance account needs to be debited. Why debited? Because this was a liability which was created at the allotment stage. Now the stage has come for which the advance was received. So when first call receiving entry is being passed, then calls in advance is debited. We are cancelling the account that we have created. So let's understand this with the help of an example. Star Limited was registered with a capital of rupees 5 lakh in shares of 10 each. So please note, whenever the shares or money is given, you should look at this sign, rupees sign here. So this is basically the authorized capital. These are not the number of shares. Number of shares would be 5 lakh divided by 10. So 50,000 would be the number of shares, right? So authorized capital is 5 lakh in shares of 10 each, and issued 20,000 such shares. Now this is total number of shares which were authorized was 50,000 shares, and number of shares issued were 20,000 at a premium of 2 per share. Then payable as 2 per share on application, 5 per share on allotment, which also includes the premium, and 2 per share on first call, which is made 3 months later. Nothing has been mentioned about the second call and the final call. Probably that's not made yet. All the money payable on application and allotment was duly received. So we've received all money, but when the first call was made, one shareholder paid the entire balance on his holding of 300 shares. Entire balance he paid with first call. So when we made the first call, there was a shareholder having 300 shares who paid the final call money also. Entire balance of his holding means obviously we've already reached the first call stage. After that there is only one stage. So he paid final call money also on the first call. And another shareholder holding 1,000 shares, so another shareholder having 1,000 shares, he did not pay the first call money. So that is calls in arrears, and the money which is received in advances calls in advance, right? Past journal entries to record the above transactions and show how they will appear in the company's balance sheet. Now first of all, let's understand how we can go about with the question. So first of all, I've mentioned the example on top left corner. You can refer to it in case you want to see the question. So in this question, it is given that the nominal face value of the share is 10 rupees and 2 rupees is the premium. It is given that application is 2 rupees, allotment is 5, which includes the premium, right? So that is basically 3 plus 2 premium, and first call is rupees 2. We don't know what's the value of the second and final call. We don't know that. How can we calculate? Now see, it's very important. If you're taking 12 as the base, then you subtract all these amounts from 12. For example, 12 minus 2 minus allotment full 5 minus 2, which gives you 5, 6, 7, 8, 9. So 3 rupees is the amount of second call. Or if you're taking 10, the nominal face value, then only the premium should not be included. Like in this case, we had included premium in the face value. So therefore, in allotment also we had taken the included one amount. But if we are taking the face value, then we'll multiply only the value of the stages. We'll not we'll subtract only the value of stages, not the premium. So if we take 10 as the base, 10 minus 2 minus 3 on allotment. We have not taken 5, we have taken 3 on allotment, minus 2. So 3 to 5, 6, 7. So again we get 3. So 3 rupees is the amount of, that will be amount of the second call, rupees 3, right? Moving on. Our first entry would be for the receiving entry of application. Our entry would be, before we move on, I think we should discuss the working note here. Calls in arrears on first call and calls in advance on first call. Calls in arrears were made by 1,000 shares, right? 1,000 shares at the rate of 2, that is, they had not paid the first call. So I've taken the first call rate, 2 rupees. So 2,000 rupees is the calls in arrears, right? And in case of calls in advance on the first call, the people having 300 shares, a holder of 300 shares, paid his entire balance. Entire balance means the second or the final call rate, which we just calculated as 3. So 300 into 3, 900 is the amount of the calls in advance, right? So now let's move to the journal entries. Our first entry will be the receiving entry, bank account DR to share application 40,000. How 40,000? Because we had issued 20,000 shares at the rate of 2 rupees on application, that's 40,000. Then we pass the entry for due. So share application account DR to share capital, the same amount is transferred to share capital. Again, the entry for due of allotment, share allotment account DR to share capital to security premium reserve, because premium, we had premium on allotment. Okay, so 20,000 shares at the rate of 5 per share including premium of 2. So again, in share allotment debit, we'll write the amount as 20,000 into the total amount, that is 5. Share capital 20,000 into the actual rate of allotment, that was 3, so 60,000. And premium is 20,000 into the amount of premium, that is 2. So 1,60,000 and 40,000. Right, then we'll pass the entry for receiving on allotment. So simple, bank account DR to share allotment, since no pro rata anything else is there, so directly full 1 lakh we are going to receive. Next will be the entry for due of the first call. So share first call account DR to share capital 20,000 shares at the rate of 2, that is 40,000. So amount is due on first call. Then we received the first call. Now this entry is a little typical. Please like concentrate while listening to this. So bank account DR to equity share first call. This is the basic entry. Now in the first call, at the time of first call, there were some calls in arrears. So calls in arrears account is debited, and there were some calls in advance. That is, the final call money was paid with the first call. Therefore, calls in advance is credited. Calls in advance is a liability, hence it is credited. Okay. Now in equity share first and final call, we'll write the same amount with which it was debited earlier. That is 40,000. So same amount, 40 here and 40 here. Then calls in arrears. There were 1,000 shares who did not pay the 2 rupees on the first call. So 2,000 is the calls in arrears. And there were 300 shares who did not, who paid the final call with the first call. The final call rate was 3. So 900 is the amount of calls in advance and 2,000 is the amount of calls in arrears. Then bank will be the balancing figure. So 40,900 minus 2,000 gives us 38,900. So these will be the journal entries. Please note, we have not passed the entry for final call because it was not mentioned that the call has already been made. That's why the entry has not been made. Moving on, in the same question, we were also asked to prepare the balance sheet. Now, the balance sheet would look something like this. As you very well know that in case of a company, the face of the balance sheet should always be same. So, under equity and liabilities, we have shareholders' funds, share capital. Since we had premium, therefore, I've written reserves and surplus. If there was no premium in the question, I would not have written reserves and surplus. Then we had we had calls in arrears. Calls in arrears goes to share capital only, so it has not to be mentioned separately under any other head. We also have mentioned other current liabilities because we had calls in advance, which is a liability, must be shown under other current liabilities. And finally, we have cash and cash equivalents. The money that we have received through the issue of shares will be mentioned here. Now, we cannot write the amounts here until and unless we prepare the notes to account. So we have 4 notes to accounts to prepare for share capital, reserves and surplus, other current liability, and cash and cash equivalent. Now, let's make the notes to account for share capital. Before we do that, let's have a look at the example. So we had the registered capital of 5 lakh in shares of 10 each. So that means 50,000 shares at the rate of 10 each will be our authorized capital, and issued 20,000 shares. So 20,000 shares at the rate of 10 each will be the issued capital, right? So in the notes to account, we will mention the authorized capital as 5 lakh and the issued capital as 2 lakh. This is only for information. The amount of authorized capital does not go to the balance sheet, neither does the amount of issued capital. What goes to the balance sheet is the subscribed capital. Subscribed capital will be shown under subscribed but not fully paid up. Why but not fully paid up? Because the company has not called up the full value. The company has only called up 7 rupees per share. because 3 rupees of the final call were not called. Out of the total issued, that is 20,000, there was only one per like the default or the calls in areas were made by 1,000 shareholders. So that means for 19,000 we have received the full amount, but on 19,000 we have only called up 7 rupees. So even though we have received full amount on 19,000, but the company has not called up the full value. That is why this is a part of not fully paid up. So 19,000 shares at 10 each, 7 called up, 1,33,000, and 1,000 shares at 10 each, 7 called up. The amount to be received was 7. Calls in areas were 2,000. So that means 5,000 is the amount that we have received from these 1,000 shares. So total amount will be 1,38,000, which will be mentioned in the balance sheet. So this subscribed capital is the amount which will be mentioned in the balance sheet. So I've just made an extract of the balance sheet. We'll do it one by one. So our note number 1 is done. We've mentioned the amount. Moving on, the next part of the balance sheet is the reserves and surplus and other current liabilities. Now reserves and surplus is made because we have premium here. So reserves and surplus, security premium reserve will be mentioned here, that is 40,000, because premium was at the rate of 2. So 20,000 shares into 2, that is 40,000. And then we make the next note to account, that is note number 3, which is other current liabilities. Other current liabilities may we will show calls in advance, which I told you again and again, it's a liability. 300 shares at the rate of 3 for the final call was paid in advance, so 900. This is the amount which will be shown in the balance sheet. So reserves and surplus 40,000 and the calls in advances 900, which is shown in the balance sheet. Moving on, we move to the asset side of the balance sheet. On the asset side, we have current assets, cash and cash equivalents. So the next note is for cash and cash equivalents, cash at bank. Now, how can we calculate cash at bank? You've already passed the journal entries. In the journal entries, you add all the banks given there. In all the entries where bank is given, you add all the amount that is debited in the bank or maybe credited. But in this question, it was only debited. So add all the banks and you will get the amount, that is 1,78,900, which will be transferred to the balance sheet on the asset side, right? So our balance sheet would look somewhat like this. Share capital 1,38,000, reserves and surplus 40,000, other current liability 900, cash and cash equivalents 178,900, and the total of both sides are equal. Please make sure that when you make the balance sheet, you always prepare the notes to accounts. If you do not make the notes to accounts, then your question is incomplete and you will not get full marks. I could also put it directly here because I could calculate the amounts in rough and put them here. This obviously has already been calculated. This could be calculated and this also could be easily calculated. But I need to prepare my notes to accounts where I show the respective things because they are also part of the format. If you don't do that, marks are cut. So I hope everything is clear to you. We've talked about the calls in arrears and calls in advance. Calls in arrears are always debited and calls in advance is always credited. And both is done in the receiving entry. So whenever there is a receiving entry and you've not received some money, you will debit it to calls in arrears. And whenever in the receiving entry you've received some money for the stage which has not yet been called, so that will be calls in advance, right? So I hope this is clear to everybody. If you have any questions, you can email me or you can leave a comment in the comment section below. It really feels nice when I see your doubts. Also, like, share, and subscribe to my channel and show some love. This is Inside Accountancy by Ch-1 signing off. Thank you.